Earnings season has kicked off, and it's kicked off with TCS, which has missed estimates in Q2. Now, even as revenues have risen, margins have missed the mark and profits have contracted by over 1%. Rima is standing by to take us through the highlights of TCS, which has kick-started earnings season. Rima.
TCS reports a margin miss in the current quarter. EBIT margins at 24.1% fall short of street expectations of 24.9%, and it also marks the second consecutive quarter where margins have come down. In Q4 of FY24, margins were at 26%. They came down to 24.7% in Q1 due to wage hike, and this quarter there is a further decline to 24.1%. This miss in margins is driving a drop in the company's profitability, so net profits are down 1.1% quarter on quarter, again lower than the CNBC-TV18 poll. But that's on margins. On the top line, on growth per se, growth is very much intact. So the company's dollar revenue has gone up by 2.2% sequentially, largely in line, in fact slightly better than the CNBC-TV18 poll of 2%. But here the growth is driven by largely India. Now India is just 9% of the company's top line, but it's seen a 21% quarter-on-quarter increase in revenues, and it's doubled practically on a year-on-year basis. So nearly 70% of the incremental revenue is driven by India, and here we know the company is executing the large BSNL deal. In fact, it appears that this BSNL deal, which has contributed to the company's top line, could have also hurt the company's margins. North America has been under pressure, so that's down 3.5%, so that's disappointing. Though Europe and UK, have showcased growth. The good thing in the numbers is that BFSI continues to show recovery. Remember, last quarter we saw the early signs of a BFSI recovery. It's further strengthened. So quarter on quarter, the financial sector growth has come in at 1.9%. So that is a positive. Deal wins largely steady sequentially. Hiring has continued for the second consecutive quarter, and attrition has been stable at 12.3%. So all in all, good top-line growth driven by the India business, but margins are a bit disappointing and they have missed street expectations.